Start.
Good evening, everyone. I am a member of Black Panthers, and today I am going to present about current affairs. First, price rise of edible oil. The price of edible oil has risen sharply in recent months. We take a look at the reasons and the options before the government of price control. Next slide, sir. How much have edible oil prices risen? The prices of six edible oils: groundnut oil, mustard oil, vanaspati, soya oil, sunflower oil, and palm oil have risen between 20% to 56% at all India levels in the last 1 year. Data on the Department of Consumer Affairs website show the retail price of mustard oil pack has increased by 44% to rupees 171 per kg on May 28 this year from rupees 118 per kg on the same date last year. The prices of soya oil and sunflower oil too have increased more than 50% since last year. Next slide. In fact, the monthly average retail prices of all six edible oils soared to an 11-year high in May 2021. The sharp increase in cooking oil prices has come at a time when household incomes have been hit due to COVID-19. Next slide. How much is produced domestically and how much is imported? According to the Agriculture Ministry, the demand of vegetable oils has been the range of 23.48 and 25.92 million tons between 2015 and 16 and 2019 and 20. However, domestic supply in this period has been much lower in the range of 8.63 and 10.65 million tons. Next slide. In 2019 and 20, domestic availability of edible oils from both primary sources, oil seeds like mustard, groundnut, etc., the secondary sources such as coconut, oil palm, rice bran oil, cotton seeds, was only 10.65 million tons against the total domestic demand of 24 million tons, a gap of over 13 million tons. Next slide. Thus, India depends on imports to meet its demand. In 2019 and 20, the country imported about 13.35 million tons of edible oils worth rupees 61,559 crore, about 56% of the demand. The mainly comprised palm 7 million tons, soybean 3.5 million tons, and sunflower 2.5 million tons. The major sources of these imports are Argentina and Brazil for soybean oil, Indonesia and Malaysia palm oil, and Ukraine and Argentina again for sunflower oil. Next slide. Why are prices rising? The increase in domestic prices is basically a reflection of international prices because India meets 56% of domestic demand through imports. In the international market, prices of eligible oils have jumped sharply in recent months due to various factors. So next slide. The price of crude palm oil for the most actively traded futures contract at the Bursa Malaysia Derivatives Exchange was quoted at 3,890 ringgit per ton on May 25, compared to 2,281 ringgit a year ago. At the Chicago Board of Trade (CBOT), the closing price of soybean for July delivery was at $559.51 per ton on May 24 against $306.16 at this time last year. The prices of soybean at CBOT and of Malaysian palm oil determine the prices Indian consumers pay for edible oil. Next slide. Even the Food and Agriculture Organization's FAO Price Index 2014-2016 is equal to 100. For vegetable oils, an indicator of movement of edible oil prices in the international market has soared to 162 in April this year, compared to 81 in April last year. Next slide.